Hello, West Pacific Market Analytics, and I'm coming at you. Been quite a while, but really I'll show you why I haven't been in here of late to talk about much. We could have been doing some videos around other data points, but I've been extremely busy working on a new company I'm putting together. I'm going to be the lead analyst for this company, and we're making great progress on it. So I've been really busy on that project. It's a new direction I'm taking. I got to continue to do these videos, but I'm going to put out the videos when I see there is a good time for me to come out and give you some data points. We'll see how that goes going forward, depending on how many clients we get and what my timeline looks like. But we're going to keep the YouTube channel going because I think it's something that's going to be very important coming into the next few years, as this is going to get crazy into this market ahead. Again, I did not put my address on here, but if you want to get a hold of me, destinytrading@gmail.com. again, you can do that. Of course, that address is on the past video, so you can pull that up. So let's not waste a lot of time here because there's quite a few slides I want to go through here. The main point and the main focus is going to be that we've reached peak inflation, and I'm going to show one model of crude oil where I think the Iran war is a panic move. They needed energy to go up because it was getting ready to start heading lower, and we're getting ready for the end of this inflationary drive. We're now at $100 trillion in debt, including unfunded liabilities, and they are really running out of things they can do now to influence this economy. And, going to war, they're trying to keep the inflation trade alive and stop this whole thing from collapsing. So don't kid yourself. It is part and parcel. We will look at that model once we get a little further in here. So let's just go through these slides I put together here. Let's start with, this first one right here. Now, this is a fast collapse that leads to deflation. And if you've been following at all what's going on in the greater economy, the commercial real estate has completely collapsed. I've never in my life seen anything like the collapse ongoing across the country, and I think we're going to see a collapse in real estate on a global scale ahead. If you look at articles around the world of what's going on in real estate, it is basically a absolute time bomb waiting to go off. It's overbuilt everywhere, and especially here in the U.S. They've been building all these buildings, and they simply haven't been able to get anyone to lease them. And it is an absolute catastrophe that is not being written off yet on the books of the banks. And they're just, when are they going to take the write-offs on it? At some point, they're going to have to. We still got all these bonds that are rolling over into the next couple of years. I've showed you that in a past video. And let's get into, even now, we're starting to see multi-family apartment buildings starting to blow up as well, where they can't make them work, and they're giving them back to the banks. So it's a can of worms. So this is the model of housing. And you notice this massive looking diamond top here. This diamond top started here in the middle of 2023, and it's now broken below. The diamond top is now breaking. You can see the trend breaking aggressively downward. You can see the velocity now starting to come down. So we are seeing the beginning of deflation now. It's looking very much like we are now at the end of the inflation trade. Now here is a model of Lowe's stock. I wanted to look at Lowe's over Home Depot. They've been beating Home Depot left and right in the past couple of months. Revenues and overall results are better than Home Depot. And so I want to look at Lowe's. And you notice in Lowe's, this signal here has never closed, right? So you can see how price back here at 54 has risen all the way up here. Got a high up here above at 278. Another even higher high here around 290, which is a little bit off the model here. But you can see it's just continually ridden up this inflation trade, which is being driven, of course, by massive deficit spending in America. They have just run up the debt like there's no tomorrow, spending well beyond revenues. And what's interesting here in the Lowe's model, as you can see, we now have a bear cross right here. So we're going from this rising V channel to now this collapsing V channel. Lowe's is getting ready to now drop below this channel once the signal goes from open to close. That has not happened yet. Excuse me, I expect that to happen soon. I've been fighting this cold that's been going around everywhere, and I'll tell you, even the tail end of it, it takes months to heal. But I think once this does break, it's then going to drop down into this V channel. So you want to start shorting these home builders. This is just a great short. But this is going to be an indicator of also what we're seeing in the deflation coming in the housing market. The other thing I'm watching closely is the carry trade. So you can see the carry trade now. As the carry trade indicator comes down, the market does counter to the carry trade and it rises. Well, you can see now we can't go any lower here. So at the tail end of here, 2025, as we've had this sideways top out, which we'll look at in just a moment. Oh man, excuse me. 4 or 5 months of sideways trade, right? So you can see here, we have now all the way down here at the mock portion of the V channel. We can't go any lower. And it's now rolling back up. The trend is starting to break. So we're going to be watching that. So I'm seeing an end also coming in the carry trade. Now the carry trade is a big part also of what's been able to fund this inflation. It's all part and parcel. And of course, with this massive inflationary blow off, we've seen these just huge rise up in silver and gold. We notice now that silver has topped out and it's began its toboggan ride back down the other side. You're not going to see a new high in gold and silver. It's done. It's now going to work its way lower over time. Now, silver could have an aggressive move lower. You notice how it had this initial sell-off from that 121 mark. Boy, who didn't sell silver at 121? Whoa, what a gift. Out of your mind if you didn't sell that top. And of course, then it completely collapsed back to 63 for a 50% loss. Gave you one more chance to get out here at 96 as it had to come back up. And now it's working its way down the collapsing trend and velocity. We'll see how fast it wants to go down, but it could be fast here in the gold and silver market. Now let's get over to the SPX here. The SPX has really got an incredible looking topping pattern. And you can see that here in this very nice looking cup pattern here for this final wave. This I call the final wave 5. This is the wave 4, and now this is the final wave push up. Wave 5 out of the 2022 low. You can see how it just formed a beautiful cup. Then it formed a very nice looking handle. Came up, broke out, rose up. You can see nice count. 1, 2, nice big 3 wave. You got a big 1 wave, small 2 wave, typical. Big 3 wave. Little bit bigger 4 wave, but small, and then this very large final 5 wave. It is clean looking. It's reached all the way to the top now. The directional of circulations channel, the V channel, is pricing already all the way back down here at 56.61, between 56.61 and 59.19. So this is going to collapse. This is going to collapse fast. My initial target would be in this 5600 area. A bit lower. You see that big gap too we got in right there. We're definitely coming down here to fill this gap. There's a couple more gaps below, but we're at least going to get down here to 56.61, and then we're going to see what it wants. We could have an initial A, a small B up, a larger move down to form the bigger A. But that could take all of this year. So right now we're just looking at this initial move down, an A, B, C type move to initial A low. We're going to have a deep low here. This A is going to get really deep. 100% retracement would take us down to 48.28. That would be a pretty good target, I think, for the retrace. This, of course, 61.8 is really interesting because that is a good place that you most likely see it. But then again, I think we could get down way down here. We could even go a lot lower. I mean, we could take it all the way down to 3,400, but I don't think we're going to go that low. So ABC down, that's what we're looking at. You can see here in this SPX flow model, you notice now that it's interesting here because see right here in all of 2024 how the V channel was able to hang up above here. Notice it rose rapidly out of that low here in that initial move we had down in 23. Came up, and then notice how the V channel held up, collapsed, we collapsed. Well, notice now that the dot curve has formed over, the V channel's moving down, flows are way below price. This sets up that collapse down to that 5,600, 5,500. I think it can be very fast down to 5,500 based upon the look of this model. And then also we've got, let me keep going here. Sorry, I flashed a bit too quick here. Bear with me. We can see this top out here, top in time here in the market was all the way back here, actually in 2020, 2021 for the top out in dock, but price was still below. So we came up, we had that corrective move. We still needed to move up into the V channel. Then we'd blown out the top of it. We're done up here. Now we're going to collapse back down over the next few years here. We're going to work our way down into this V channel going out. My estimation for a low could be out as far as 31, 32. It's going to be a long process working lower, and we won't even get into that. Let's just worry right now about this first move down and take it step by step. You can see this model here. Every time we had a top, I could have showed you the top, same thing in 2000. Let's see, maybe let's not pull it in. Anyway, you can see every time this red line tops out, the market corrects. This red line tops out, the market corrects. We've got this red line topped out, and you see the red line and the trend moving lower. But what I think has held it up, and this is a close-up of this model right here, you notice now that the velocity is now coming out of that red line, already collapsing down here. You see the trend starting to stair step down aggressively. The top is in. This is a major signal right here. And we don't get a low until this red line bottoms out down below here. You notice the low here, and you notice the low here. So we got a long ways to go here. This is going to take time, a few years for that to come down, and we'll see then what comes on the other side. But we're heading down. Everything is there to show the market's topped out. Now this is Nvidia. Now remember, the NDX is primarily for stocks, and that's part of what's kept this charade alive, right? I mean, Nvidia, Apple, Microsoft, and Amazon are almost 41% of the NASDAQ, of the not the NASDAQ, excuse me, the NDX, which is 100 stocks, right? But can you imagine 100 stocks, we're near 41%. Now this adjusts a little bit, so Nvidia now could be a little lower weighting than back when I drew this model, but it doesn't matter. A huge amount of the weighting in the top 100 stocks of the NDX is in 4 stocks, right? The whole market, Nvidia, Apple, Microsoft. And Nvidia is key. So you see now how Nvidia is topped out, the trend's breaking. Notice velocity's been coming out for a long time. Once Nvidia starts uncorking, which I think it's ready to do, notice the signal just closed here last week. It opened up for the last time back here in May. It's now closed. It's now targeting at least 116 and could go even lower. So I'm looking at that as maybe some sort of a timing mechanism for this first wave down around a 116 low. We might get below because that's just at the top of the V channel. But Nvidia is a short. It's ready to go at last. And look at this massive head, massive right shoulder, massive left shoulder. We could see the same pattern in the index as well. This just giant head and shoulders top. This head and shoulders top started all the way back here in June of 2025. Look how big that top is. That is just incredible. So we move forward here and we look at a technical model here. You notice price up here is starting to come down now, this trend, right? So you can go back in time here. This red here in 2022 was still below the working down V channel, right? So it had to come back up, pulling price up. The red's back into V, and then it came up again. So it got oversold here, too deep. Came back up, got too high here, but notice coming out of that low in 23, everything built up a ton of velocity. So we kind of came up to it, traded. We had that initial corrective move here that I thought could have possibly been it, but I think it needed. That was just a wave 4 in this final wave, and this is now the completion of the wave 5. Head and shoulders top, ready to go. This is ready to rock and roll. This is actually what I call a crash model. When you have a very thin band up here and a deep blue below, it's going to be fast. And look at this data model. I find this really interesting. You can see in 2022, the indicator was down here. Notice it collapsing and price coming down with it. And notice once we started rising in 2022, the red stayed above. So we didn't get much of a corrective move. We finally got a corrective move here, you see it? And then it went back up, and it stayed up here the entire time, all of 2024. And then we finally got that corrective move here in early 25, and it rose back up. So what we're going to be watching here, you notice the trend's breaking below. We're going to be watching how reactive this red line is now in this corrective move. Is it going to look like this? And this, where we had a minor corrective move, or is it going to be a much larger breakdown like we saw back in 2022? So we're going to be watching that data model very, very closely. Signal's gone off. You can see it. There's one other signal I'm waiting for. We'll look at that at the end of the video, and I'll talk about that. But the signal's gone off. Last time we had a minor signal here and the bigger signal back in 25. So we got signals firing off here. Now here's that crude oil model I was talking about, right? Here's the price of crude oil. You can see it right here, just grinding sideways, right, for a long time here. Since they blew it back up. Of course, we had this big deflationary collapse in 2020. They brought COVID out to reinflate the market again, to be able to print trillions of dollars, to close everything down and create false inflation. But I don't think it was that, because I still think it was part of the overall count and the pattern out of the 1943 low. So I don't want to look at it that way. I just want to look at it technically, because in reality, the channel was still rising here. And, you know, this indicator, as you can see here, dropped off. And you can see that indicator is now starting to go vertical down here on oil. And notice how the trend in oil was beginning to collapse. The trend in the velocity is collapsing. And lo and behold, this was getting ready to collapse. And what happened? They went in. They attacked Iran. So don't be fooled. It's all about money. War is money. It's about nothing else but economics. Don't be dumb. Iran has nukes. Well, North Korea has nukes. Pakistan has nukes. Israel has nukes. Everybody has nukes. And we're worried about Iran? Come on. Now, what's interesting is Bitcoin. Bitcoin's also showing the beginning of this deflationary collapse. So you can see here, rising very nice with this inflation indicator. I've got some extremely nice looking Bitcoin models. I want to watch this closely because I think Bitcoin is going to be a great timer to what's going to happen in the next couple of years. So you can see that we've got this just absolute collapse ongoing now. We're priced here in the V channel. It needs to rise up a little more, but we can see this beginning deflationary move, ending inflation in the Bitcoin move, right? And if we go on here, I want to show you something. Now, this is a Bitcoin model, modeling it to inflation. So you notice back here in 2022, how this red line never dropped, right? You see how it's just kind of trying to move down, and the market, it had this big sell-off here in Bitcoin back down to 15,000. And then, of course, we had this huge blast off higher. But I want you to notice something here. This line has gone up, but this is what it looks like right now. In the history of Bitcoin, this red line has never rolled over. This is that same line we were just looking at in 2022. In other words, in 2022, it never rolled down. Do you see that? It kind of started, but it never kicked in. And right now, it has gone bearish. And for the first time, you can run this back 10 years, and it's since the mid 2015 or so period, it's never turned down. And look at this rolling over dot curve. Look at the bear cross right here. Look at the whole look at this. This is the 129,000 top. And then just look at Bitcoin coming right down this deflationary model. This is modeling the inflation in Bitcoin. And it is ready and is showing something. It is flashing a warning sign in this market. And here's the inflation model to the S&P. Notice the start here was not at that low that we had. So in other words, we needed this final fifth wave move. And look at the massive head and shoulders top, just like we saw in Nvidia. Notice how we have this absolutely giant head and shoulders top as well in this space here in the S&P. Notice shoulder over here, head's a little bit out of the picture here. Notice now that we are getting the deflation in the indicator. We've had it rise up a little, but it's getting ready to drop back down and start working down this channel. Massive. I would expect a giant head and shoulders top here in the S&P to finish off a bull run out of the 1943 low. Now look at this. This is the same idea, looking a little differently. And notice now, you notice here, we're going back into 2021. Inflation was up here. We had an initial deflationary collapse, 2022, came back up. Look at it trade with the market, right? But notice even though the inflation indicator was down here, the market still kept rallying. Well, it could keep rallying again simply because, you know, number one, we had not rolled over yet in the curve here yet. So you can see, even though we're working down, price is still playing around because we've only got 4 or 5 stocks holding this market up. It's rigged. But notice now that the inflation indicator is back up here to the dot curve. This is worked down, kind of working over the dot curve. And notice how we've rolled over here. This is all ready to collapse again. So this is going to pull the market down here into the rest of 2026. We're going to have to see how far it can go. And again, we see it here. Notice this deflation indicator coming down. There's our low. Big, massive, funny looking candle there at that low in April of 26. But notice the trend was still up here. So the market rallied back up to trend. It rallied back up to the inflation. And now look what the inflation trend and the inflation velocity has done. This is ready to just completely collapse. And in the quarterly model, we've got a falling 3 top here. Again, notice that price was priced right at the top of this trend. Notice it all collapsing. Interesting looking final pattern here in the quarterly model. This is a typical falling 3 bearish pattern. This could now have a huge drop into the end of March. It could take us this candle all the way down to here. Won't get us quite to the low, right, of April, but it's got a long way to go to finish off. So I'm expecting in the next 2 weeks something interesting to happen. We'll see how that sets up. There's one model that hasn't fired off, and that's this one right here. Notice the signal didn't go off yet. You see back here in 2022, signal went bearish. You notice it. You notice here in that minor corrective move right here, we had the signal going off, and that last corrective move in 2025, the signal went off. So I'm watching this model real closely to see if we get this signal going off. So that's all I've got for you today. I just wanted to talk about this potential deflationary collapse that could be beginning here in the market. Be wary. I'll be back at you to talk about other things. This is running a bit long, so let's cut it off here, and Glenn's out. Thanks for tuning in. I really appreciate it. Hit the like, hit the subscribe. Again, I'll be back with more videos ahead, and the long delay is not necessarily because I couldn't come over here again. It's simply because I didn't have a lot to report. I'm out.